What if the real reason you're losing money has nothing to do with fear, greed, or discipline? What if the journaling, the mindset work, the meditation, none of it matters because you're trying to fix a system that was never built to win? Most traders think the solution is more control, more self-awareness. But what if you're sitting inside a car with no engine and all your effort is just pushing it uphill? That's what trading without edge feels like. You can follow the rules, you can manage risk, but if your setup has no positive expectation, no real advantage, you are mathematically destined to bleed out. According to data, over 80% of day traders quit within their first 2 years. But they don't quit because they're lazy or emotional. They quit because they spend years perfecting systems that had no business existing in the first place. No statistical foundation, no validation, just noise dressed up as structure. Now here's the kicker. During that same period, a small minority quietly thrived. They weren't necessarily smarter, they weren't calmer, they simply built edge, strategies with a measurable, repeatable statistical advantage. And once you see what they see, you can never unsee it. You realize the game isn't rigged, it's just designed to punish those who walk in blind. This video isn't about hacks or indicators, it's about clarity. It's a flashlight in the fog. And if you've ever said to yourself, I did everything right but still lost, then maybe, just maybe, you weren't broken. Maybe you just never had a real edge, until now. Welcome to Trading Psychology Stick, where we decode the mental game behind profitable trading. Quick note, what you're about to learn comes from years of observation across prop firms and professional traders. This isn't financial advice, it's educational insight into how the best traders think. And in the next 60 minutes, you're going to experience 3 transformations. First, you'll see why everything you believed about trading success was built on illusion. Second, you'll discover the mathematical truth that separates gamblers from professionals. And third, you'll learn how to build, test, and embody real edge. Let's begin. Chapter 1. The Beautiful Delusion. The first time you win in trading, it feels magical. A perfect entry. A clean breakout. The chart does exactly what you thought it would. You close the trade and feel like you've cracked a code. You're not guessing. You're not gambling. You're in control. And when you win again and again, you start believing you've found your edge. Maybe it's RSI divergence. Maybe it's 3 green candles. Maybe it's something you can't explain, but you feel it. So you size up. You go all in, not just with money, but with belief. You think you've arrived. But let me tell you about the most dangerous trader you'll ever meet. He doesn't wear a suit. He doesn't scream on CNBC. He sits inside your head. He sounds like logic. He looks like confidence. He is you, just slightly off, slightly biased, slightly blind, and he's been sabotaging your trades from the beginning. This is the beautiful delusion of trading, mistaking randomness for skill, variance for system, luck for edge. Your brain isn't built to trade, it's built to survive. And survival means finding patterns, even where none exist. The technical term, apophenia, the dangerous version, I've found something that works for me. Here's what actually happened. The market gave you a gift wrapped in randomness. You won a few trades. Your brain, desperate for meaning, created a story. I can read price action. I have a feel for this pair. My gut knows. But the market doesn't care about your stories. What it gives with variance, it takes back with violence. One mentor at a prop firm had a favorite question for new traders. Show me your last 50 trades, not your best 5. The silence that followed was deafening. Most couldn't. They had 7 trades, maybe 12. You don't have a system, he'd say. You have a mood. Think about this for a moment. When a casino opens a new roulette table, sometimes red hits 8 times in a row. Players rush to bet black, thinking they've spotted a pattern. Others bet red, thinking it's hot. Both lose eventually. Because randomness clusters, it creates illusions. And traders, unlike casino players, get to tell themselves stories about why their bet was actually skillful. The cruelest part? Your early wins weren't fake. They were real money, real dopamine, real confidence. But they were built on statistical noise, not systematic edge. It's like building your house on sand during a drought. Everything seems solid until the first storm. So, before we go any further, I need you to answer one question honestly. Not for me, for yourself. Has your strategy actually worked consistently over 100 trades? Or did it just have a good week that you've been chasing ever since? Because the difference between a good trade and a good system is the difference between luck and lifestyle. One feeds your hope, the other funds your future. If that question stings, perfect. Pain is the first step toward truth, and truth is the foundation of edge. In the next chapter, I'll show you exactly what edge looks like, not in theory, but in cold, hard math. The formula that separates wishes from wealth. Chapter 2. The formula that changes everything. Stop everything you're doing and write this down. I'm about to give you the formula that separates professional traders from everyone else. It's not complex, it's not secret. But 90% of traders have never calculated it for their own strategy. Ready? Edge equals win rate times average win minus loss rate times average loss. That's it. That's the line between slowly bleeding out and steadily building wealth. If your result is positive, you have edge. If it's negative, you're gambling with extra steps. Let me show you why this changes everything. Imagine two traders. Trader A wins 80% of the time. Sounds amazing, right? But his average win is $100, while his average loss is $500. Let's calculate. 0.8 times 100 minus 0.2 times 500 equals 80 minus 100 equals negative 20. He's losing $20 per trade on average despite winning 80% of the time. Trader B only wins 40% of the time. Sounds terrible, but her average win is $300 while her average loss is $100. Calculate. 0.4 times 300 minus 0.6 times 100 equals 120 minus 60 equals positive 60. She's making $60 per trade on average despite losing more often than winning. This is why win rate is vanity, but edge is sanity. You can lose more than you win and still be profitable. You can win more than you lose and still go broke. The math doesn't lie. The math doesn't care about your feelings. The math is your truth detector. Here's what's shocking. Most traders have no idea what their real numbers are. They remember the wins more than losses. They forget the scratch trades. They don't track the actual averages. They trade on feeling in a game governed by math. It's like trying to build a rocket based on how heavy it feels, instead of calculating thrust-to-weight ratios. But here's the beautiful part. Once you know this formula, everything clarifies. You stop chasing win rate. You stop celebrating single trades. You start thinking in samples, in averages, in expectations. You become a casino, not a gambler. And casinos don't need to win every hand, they just need positive expected value over time. At prop firms, this is day one material. Before you trade a single share, you must prove your edge mathematically. Not with confidence, not with conviction, with data. What's your expectancy over 100 trades? If you can't answer, you can't trade. It's that simple. So here's your first transformation. Right now, while this is fresh, calculate your edge. Take your last 30 trades. Calculate your actual win rate, your average win, your average loss. Plug it into the formula. The number staring back at you is your current reality. Positive, you have something to build on. Negative, you now know exactly what needs to change. And if you've never tracked these numbers, if you don't have the data, then you've discovered your first problem. You're not trading, you're hoping with a chart open. But that changes today. Because now you know the formula, now you have the tool, now you can separate gambling from edge. In the comments below, I want you to type just one thing, calculated. Not your number, not whether it's positive or negative, just calculated. Because that single act, that moment of mathematical honesty, is where real trading begins. But knowing you need edge and building it are two different games. In the next chapter, I'll reveal why your identity, not your strategy, might be the invisible force sabotaging every trade you take. Chapter 3, The Trader in the Mirror. You've calculated your edge. Maybe it's positive, maybe it's negative. But here's what that formula can't tell you. Why do you keep breaking your own rules? Why do you nail paper trading then crumble with real money? Why does the same setup feel different depending on your mood? Because there's a hidden variable in every trade. It's not on the chart. It's not in the news. It's in the mirror. It's you, your identity, your wiring, your deepest beliefs about money, success, and self-worth. And until you align your trading with your true nature, you'll sabotage every system you touch. Let me tell you about two traders at the same firm. Same training, same strategy, same capital. Trader 1 thrived, Trader 2 imploded. The difference? Trader 1 was naturally patient, analytical, loved puzzles. The strategy required waiting, analysis, precision, perfect match. Trader 2 was naturally aggressive, quick thinking, thrived on action. Same strategy felt like torture. His subconscious found ways to escape. Overtrading, premature exits, rule breaks, not because he lacked discipline, because he was trading against his nature. This is the identity crisis no one talks about. You download someone else's system. You force yourself to trade their style, but your nervous system rebels. If you're wired for action but trading daily charts, you'll sabotage. If you're built for analysis but scalping, you'll freeze. The market doesn't break you. The mismatch does. But it goes deeper, much deeper. See, every time you check your P&L, you're not just checking numbers. You're checking your worth. Green day, you matter. Red day, you're worthless. This fusion of identity with outcome is trading's hidden killer. Because once your self-worth depends on profit, you stop trading markets. You start trading validation. That's when the spiral begins. You lose money, so you feel worthless. You feel worthless, so you need to prove yourself. You need to prove yourself, so you overtrade. You overtrade, so you lose more. The market becomes your therapist, and therapy is expensive when you're paying in futures contracts. I've seen brilliant traders quit, not because they couldn't find edge, but because they couldn't separate their P&L from their identity. Every drawdown became an existential crisis. Every losing streak questioned their value as humans. They weren't trading anymore. They were bleeding self-worth through their brokerage account. Here's the breakthrough. You are not your trades. Read that again. You are not your trades. You're the consciousness executing a system, the observer learning from outcomes, the craftsman refining technique, but you are not the outcomes themselves. This isn't philosophy, it's survival. Because when you uncouple identity from results, everything changes. Losses become data. Wins become feedback. Trading becomes practice, not trial. So here's your identity audit. Ask yourself, do I trade better in morning or afternoon? Fast markets or slow? Many positions or focused few? Do I need to understand why or just follow rules? When do I break discipline? What triggers my worst decisions? The patterns reveal your optimal trading personality. Then ask the harder question, who am I when I'm not trading? If you can't answer, if your entire identity is trader, you're in danger. Because markets will test that identity daily, and if it's all you have, you'll crumble. Build identity anchors outside trading. Parent, creator, athlete, friend, human. Trading is something you do, not something you are. This isn't retreat, it's strategic. Because when your worth isn't on the line, your edge can finally breathe. The paradox? When you stop needing to profit to feel valuable, you often become more profitable. The pressure lifts, the desperation vanishes. You trade from abundance, not scarcity. Your decisions clarify because they're no longer clouded by identity protection. Take a moment, put your hand on your chest. Say, I am valuable regardless of today's P&L. Feel resistance? That's your edge killer. That's what we fix next. Because in the upcoming chapter, you'll discover the 3 paths to building real edge, methods proven by professionals who've moved beyond hope into systematic profit. Chapter 4, 3 paths to freedom. You understand edge mathematically, you've faced your identity. Now comes the question everyone asks, but how do I actually build edge? Stop searching for the perfect indicator. Stop buying another course. The professionals use 3 timeless methods, and I'm about to hand them all to you. Path 1. Become a pattern hunter. This isn't about memorizing candlestick formations. It's about obsessive observation. The best discretionary traders stare at screens not for minutes, but months. They log everything: price reactions at key levels, volume spikes, correlation oddities. They're archaeologists digging for repetition and randomness. One trader noticed something others missed. Every time oil crashed more than 5% in a day, airline stocks popped the next morning 65% of the time. Not always, not guaranteed, but enough to build edge. He didn't find this in a book. He found it by watching, logging, testing for 6 months. That's pattern hunting. You observe without opinion. You document without bias. You let the market show you its habits instead of imposing your beliefs. Path 2. Engineer your edge. Some traders don't wait for patterns. They create hypotheses and test them. Do stocks that gap up 4% on earnings with high volume continue rising 70% of the time? Form hypothesis. Gather data. Test relentlessly. This is trading as science. During the 2021 bull run, one trader hypothesized recent IPOs that hold above offering price on day one with double average volume see continuation. He tested 50 examples, found 68% accuracy with 3-to-1 reward to risk, built a system. The beauty? When markets shifted, he formed new hypotheses. Same method, different conditions. Evolution, not extinction. Path 3. Reverse engineer success. This is the fastest path, yet most ignore it. Find the biggest moves in your market. Dissect them forensically. What preceded the 500% runner? Float size, news catalyst, volume pattern, price structure. You're not trying to catch what happened. You're recognizing what happens next. Build a library. Screenshot every massive move. Tag the conditions. After 100 examples, patterns emerge. Maybe every giant squeeze had 4 things: low float, high short interest, catalyst, volume explosion. Now you have a framework, not perfect, never perfect, but probabilistic, and probability tracked over time equals profit. Here's what all 3 paths share: systematic documentation. The market is your laboratory. Every trade is an experiment. You're not hoping, you're hypothesizing, not guessing, gathering data. This is how edge is born. But I'll tell you the shortcut most miss: mimicry. Find someone with proven edge. Not Instagram posts, real, verified results. Study their system completely. Execute it exactly as taught for 50 trades. No modifications, no improvements, just pure replication. Only after proving you can copy the results do you earn the right to customize. This isn't lack of creativity, it's apprenticeship. Paul Tudor Jones learned from Eli Tullis. Every great trader started by mastering someone else's edge before developing their own. Why reinvent what's already proven? Master first, innovate second. The mistake everyone makes: they try all paths simultaneously. They observe casually, test randomly, copy partially. That's not building edge, that's building confusion. Pick one path, commit completely. Document everything, review relentlessly. Edge isn't discovered in days, it's developed over months. So here's your assignment. Choose your path. Will you observe patterns, test hypotheses, reverse engineer winners, or find a mentor to mimic? Pick one, just one. Commit to it for 90 days. Document every single observation, test, or trade. Because at the end of those 90 days, you won't hope you have edge. You'll know. Drop a comment with your chosen path: observer, scientist, detective, or apprentice. Let's see who's serious about building rather than browsing. But finding edge is only half the battle. In the next chapter, you'll discover why your exit strategy matters more than your entry, and how the wrong exit can turn winning edge into losing experience. Chapter 5, The Profit Multiplier. Everyone ignores. You found the setup, perfect pattern, clean entry, then you watched a winner turn red, or worse, you scratched for break-even while the market ran 10R without you. Sound familiar? Here's the truth that changed my trading forever. Your edge isn't in your entry, it's in your exit. 2 traders, same exact entry, same stock, same timing. Trader A makes 0.5R, Trader B makes 3R. The only difference? Exit strategy. Yet most traders spend 90% of their time perfecting entries and 10% on exits. That's like obsessing over how to start a race while ignoring how to finish. Let me show you what exit mastery looks like. A momentum trader tested 3 exit strategies on the same setup over 100 trades. Fixed target at 2R gave him 45% win rate, 1.35R expectancy. Trailing stop at previous bar low delivered 38% win rate, 1.52R expectancy. Hybrid approach, scaling half at 1R then trailing the rest, produced 52% win rate, 1.61R expectancy. Same entry, 3 different outcomes. The hybrid exit improved results by 19%. That's the difference between struggling and thriving. But here's what's fascinating. Optimal exits match your edge type. Mean reversion needs fixed targets. Trends need trails. Breakouts need time stops or partials. The exit must match the setup's personality. Using the wrong exit is like putting racing tires on an off-road truck. Doesn't matter how good the vehicle is. Wrong equipment equals poor performance. Most traders exit on emotion. It feels like enough, or they fear giving back gains, or they hope for more. But feelings don't optimize returns. Testing does. The market doesn't care what feels right. It rewards what works over time. And what works is often counterintuitive. Sometimes the best exit is time-based, out in 30 minutes regardless. Sometimes it's structure-based, break of key level. Sometimes it's indicator-based, moving average cross. You don't know until you test. Here's your exit laboratory. Take your current strategy. Test 5 different exit methods over your next 50 trades. Same entry criteria. Different exits. Track not just profit, but emotional difficulty. Some exits are mathematically superior, but psychologically impossible for certain personalities. Find the intersection of profitability and executability. The advanced secret, scaled exits. Different portions serve different purposes. First scale reduces risk. Second captures expected move. Third catches outliers. This isn't complexity for its own sake. It's recognition that markets offer multiple opportunities within single trades. Define your exit before you enter, not during, never during. When you're in position, your brain chemistry literally changes. Cortisol spikes. Dopamine fluctuates. The exit plan created calm beats the one created under pressure every time. Perfect entries with poor exits lose money. Average entries with excellent exits print money. Yet traders obsess over the perfect setup while ignoring the perfect exit. They're optimizing the wrong variable. Your entry gets you in the game. Your exit determines if you win. So here's your edge multiplier. Stop searching for better entries. Start testing better exits. The same setup you're trading now could be twice as profitable with optimized exits. Not theory, mathematical fact. Test it, track it, transform it. But even perfect entries and exits can't save you from the deeper game being played. In the next chapter, you'll discover how to build systems that execute your edge automatically, removing the weakest link in your trading: yourself. You have edge, you have exits, but Monday morning comes and chaos returns. You're scanning 200 tickers, missing your setups, taking marginal trades. By noon, you're exhausted, not from trading, but from deciding. Sound familiar? Here's the shift that changes everything. Stop trading manually. Start trading systematically. Watch how a professional operates. They don't wake up and browse charts hoping. They've built machines that do the hunting. Scanners that filter 5,000 stocks down to 5 that matter. Alerts that ping when probability aligns. They're not reacting to markets. They're waiting for markets to trigger their systems. It starts with clarity. Can you write your strategy in one sentence? I buy stocks gapping up over 4% on double average volume that hold above VWAP for 15 minutes and break opening range high. Clear, specific, programmable. If you can't write it clearly, you can't trade it consistently. Now translate clarity into conditions. Each element becomes a filter. Price change greater than 4%. Volume greater than 2x average. Price above VWAP. Time equals 9:45 or later. Price breaks opening range. These aren't suggestions, they're laws. The market must meet you here, not wherever your emotions wander. Build the infrastructure. Modern platforms let you create these filters. You go from watching everything to monitoring the few that qualify. You preserve mental energy for high-value decisions. Should I take this valid setup? Is there unusual context, not low-value exhaustion? Maybe this chart looks good, but systemization goes beyond scanning. Create position sizing algorithms. If win streak exceeds 5, reduce size 20%. If daily loss exceeds 2%, stop trading. If volatility spikes 50%, cut position size in half. These rules execute regardless of how you feel. They protect you from yourself. Automate your risk management. Stop losses set immediately upon entry. Trailing stops triggered at profit targets. Alerts for scale points. Remove the moment-to-moment decisions that invite emotional interference. Your job isn't to manage every tick. It's to manage the system managing the ticks. The transformation is profound. Trading becomes boring, beautifully boring. You're not hunting or hoping. You're executing a process tested over hundreds of trades. Your role shifts from trader to system manager, from reactive to proactive, from exhausted to energized. One trader shared his evolution. I used to end each day mentally drained, win or lose. Now I'm fresh at close. The system does the heavy lifting. I just supervise. His results? 40% improvement in execution, not from better edge, from cleaner implementation. Here's the framework. Document every rule, every exception, every detail. Convert rules into scannable criteria. Build the infrastructure. Create position algorithms. Predefine risk parameters. Execute the system. Track results. Refine based on data, not opinion. The goal isn't removing human judgment. It's preserving it for moments that matter. Computer finds the setup. You decide context. Computer manages position. You manage portfolio. Division of labor. Human creativity plus machine consistency equals sustainable success. This isn't about becoming robotic. It's about becoming efficient, like a chef who preps ingredients before service. The mise en place enables creativity during execution. Your systems enable edge expression without emotional contamination. Your mission this week: take your strategy and convert one element into systematic rules. Just one. Maybe it's your scanner, maybe it's position sizing, maybe it's stop losses. Build it, use it, feel the difference, then expand. Because each systematic element compounds your edge. But systems alone aren't enough. In the next chapter, you'll learn how your memory lies to you every day, and how building a proper database transforms intuition into intelligence. Chapter 7. Your lying memory. Close your eyes. Think of your last 5 trades. Which ones come to mind first? The winners or the losers? The perfect setups or the painful failures? If you're human, your memory is lying to you right now, and those lies are killing your edge. Here's how your brain sabotages your trading. It remembers with emotion, not accuracy. That devastating loss feels like it happened yesterday. Those 10 small wins blur together. The perfect setup that failed burns bright. The mediocre setups that worked fade away. Your internal pattern recognition is broken by design. This is why you hesitate on valid setups. Your brain screams, "Remember last time." But last time is distorted data. Maybe that pattern actually wins 65% over 100 trades, but you remember the 35% more vividly, so you skip the trade. Or worse, you take it with such fear that you manage it poorly. Your memory becomes your enemy. But memory distortion is just the beginning. Enter the edge killers: fear, greed, hope, regret. These aren't just emotions, they're execution destroyers. Watch how they work. You have a setup with proven 65% win rate. 2 losses hit. Fear whispers, it's broken. You skip the next signal. It wins big. Regret enters. I knew I should have taken it. Next setup appears. Greed pushes. Make up for the missed one. You oversize. It loses. The spiral accelerates. Your edge didn't fail. Your psychology did. The same system that profits over 100 trades got derailed by emotions over 3 trades. This is how winning strategies create losing traders. Not because the math breaks, because the mind breaks first. The solution? Build an external brain. A database that remembers objectively what your mind recalls subjectively. Screenshot every trade. Tag the conditions. Note your emotional state. Track not just P&L, but the DNA of each decision. Were you calm or desperate? Confident or fearful? Patient or pressing? Every month, interrogate your data. Which setups actually have highest win rate? Which perform in trending markets? Choppy markets? When do you trade best? Morning or afternoon? After wins or losses? The patterns will shock you. Your favorite setup might win 40%. That boring setup you avoid, 75% winner. But here's the advanced move. Correlate emotions with outcomes. You might discover you win 70% when calm, but 30% when fearful. That's not a trading problem. That's a state management opportunity. The data doesn't lie. The data doesn't forget. The data shows you what is, not what you fear or hope. Create emotion interrupts. After any loss over 2R, mandatory 30-minute break. After 2 consecutive losses, reduce size by half. After 3 losses, stop for the day. These aren't weaknesses, they're circuit breakers. They protect your edge from your humanity. Build a pre-trade protocol. Rate your emotional state 1 to 10. Below 7, don't trade or trade smaller. Review your last 5 trades. Are you seeking revenge? Trying to impress? Feeling invincible? These states predict poor execution. The protocol filters contamination. The ultimate evolution, emotional fluency. You still feel fear, greed, hope, regret, but you recognize them as weather, not commands. You execute despite emotions, not without them. You build systems that protect your edge from your psychology. Because edge is mathematical, emotions are biological. When biology overrides math, accounts die. Your assignment? For 1 week, track your emotional state with every trade. Note what you feel before, during, after. Look for patterns. When do emotions help? When do they hurt? This awareness becomes your early warning system, your psychological edge beyond edge. Because in the next chapter, you'll discover the invisible game above the game, the metagame that determines when your edge thrives and when it dies. Chapter 8. The game above the game. You built edge, you manage psychology. But suddenly, nothing works. Same setups failing, same patterns breaking. You haven't changed, your system hasn't changed, but your results crater. What happened? You missed the metagame. Most traders think the game is the chart, price action, patterns, indicators. But that's like thinking poker is just about cards. The real game includes the table, the players, the stakes, the history. Markets have metagames too, and your edge only works when aligned with the bigger game being played. Think about it. Your breakout strategy crushes during trending markets, but when volatility dies and ranges dominate, that same edge becomes a liability. The strategy didn't break. The game changed. You were playing checkers while the market switched to chess. This is why pros track context religiously. The metagame has layers. Macro conditions create the weather. Fed policy, economic cycles, global events. These determine if markets trend or chop, explode or grind. Sector rotation shows where money flows. Sometimes tech leads, sometimes commodities, sometimes defensives. Your edge might thrive in one sector, die in another. Liquidity cycles affect price behavior. High liquidity creates smooth trends. Low liquidity creates whipsaws. Same pattern, different outcome. Participant behavior evolves. When algorithms dominate, edges get arbitraged. When retail floods in, new inefficiencies emerge. Here's what separates amateurs from professionals. Amateurs blame their strategy when conditions change. Professionals recognize the season shifted. They know their edge is conditionally profitable, not universally applicable. The difference between thriving and surviving is timing the seasons. Some traders build multiple strategies. Trend systems for directional markets, mean reversion for ranges. Volatility plays for explosions. They're not trying to force one approach. They're playing the game being played. Others specialize deeply but wait patiently. They know their edge needs specific conditions. When conditions vanish, they reduce size or stop. They're not broken. They're strategic. The biggest metagame shift, bull to bear transitions, or calm to volatile. Strategies printing money for years suddenly bleed. Traders blame themselves, but the game fundamentally changed. What worked on easy mode fails on hard mode. Recognition saves accounts. Denial destroys them. Here's your metagame map. Define ideal conditions for your edge. What volatility level, trend strength, volume patterns, sector behavior, monitor these daily. When they align, size up aggressively. When they diverge, size down or sit out. You're not predicting, you're recognizing. Big difference. Track performance across different regimes. Your edge might thrive in high volatility, but suffer in low. Perfect in uptrends, but terrible in downtrends. This isn't failure, it's intelligence. You're mapping when to deploy your weapons, not forcing them into every battle. Advanced traders trade the metagame itself. They position for volatility expansion before it happens. Rotate sectors ahead of crowds. Recognize shifting participant behavior. But this comes only after mastering your edge within favorable conditions. Walk before you run. The metagame isn't an excuse. It's context for intelligent adaptation. Your edge doesn't exist in a vacuum. It breathes within larger systems. Ignore those systems, lose money, understand them, multiply returns. Quick diagnostic. Review your worst trading periods. Were you wrong about trades or trading the wrong environment? Often it's the latter. You played your game while the market played different rules entirely. Recognition is redemption. But understanding the game isn't enough. In the next chapter, you'll discover the final evolution. How to stop trading edge and start becoming it. Chapter 9. Becoming the edge. You've come far. From illusion to insight. From hope to system. From reaction to recognition. But here's the final transformation most never make. You don't just trade edge, you become it. This isn't mystical, it's practical. Watch a master trader work. They don't force or fight, they flow. Their pre-market routine isn't obligation, it's preparation. Their rules aren't restrictions, they're expressions. Their discipline isn't external, it's embodied. They've stopped trying to beat the market. They've learned to dance with it. Think about water flowing in a river. It doesn't fight the banks. It follows the path while maintaining its nature. Master traders embody this. They maintain their process while adapting to market flow. Firm in principle, flexible in application, consistent in execution, adaptive in strategy. This is edge embodied. The daily practice becomes meditation in motion. They scan markets with curiosity, not desperation. They see setups without attachment. They execute without drama. They manage risk from respect, not fear. They review trades for growth, not validation. Each element flows into the next. Natural, sustainable, profitable. Here's what changes when you embody edge. Individual trades lose their grip. You trust the process so deeply that single outcomes don't matter. You're playing an infinite game where the goal isn't to win today, but to keep playing tomorrow, and the next day, and the next year. Sustainability over intensity. Master traders share qualities. They've made friends with uncertainty. They don't need to know what happens next. They know their edge plays out over time. They've released control. They influence what they can, their execution. They accept what they can't, market randomness. They find joy in the process, the analysis, the patience, the execution, the review. Trading becomes craft, not combat. They maintain beginner's mind. Every day brings new patterns, new lessons. They stay students despite success. This isn't passive. It's the highest form of engagement. When you embody edge, you stop fighting yourself. Your psychology aligns with your strategy. Your strategy aligns with your nature. Your nature aligns with market reality. No friction, no forcing, just flow. The paradox of mastery. The more you embody edge, the less you need any trade. You're so confident in your process that desperation disappears, pressure evaporates. You trade from abundance, not scarcity. From expression, not necessity. This creates a positive spiral. Less pressure, better decisions. Better decisions, more profit. More profit, more confidence. More confidence, less pressure. You stop being a trader who has a system. You become a system that trades. The distinction transforms everything. Because systems don't have emotions. They don't revenge trade. They don't get excited or depressed. They just execute, again and again. Compound results over time. But this isn't about becoming robotic. It's about becoming integrated. Your human creativity guides the system. Your intuition informs context. Your experience refines execution. But these enhance edge rather than override it. You're the conductor, not the chaos. The journey transforms you. You started seeking profits. You discovered process. You began with strategies. You developed philosophy. You wanted to make money. You learned to make meaning. Trading becomes a mirror for life. Discipline, patience, humility, acceptance. These aren't just trading virtues. They're life virtues expressed through markets. So here's your final question. Who do you become when you fully embody your edge? Not what do you earn, not what you achieve, but who do you become? Because that person, that presence, that way of being, that's your real edge. That's what markets can't take away. That's mastery. Take a breath. Feel the journey from fog to clarity, from reaction to response, from having edge to being edge. This isn't the end, it's the beginning. The beginning of trading from fullness, not need. From flow, not force. Welcome to mastery. Your edge awaits. You've just completed a journey most traders never take, not through strategies or indicators, but through the levels of trading mastery. You've seen why most fail and how few succeed. Now comes the only question that matters. What will you do with this knowledge? You learned the 9 transformations. 1. Escape the beautiful delusion of false patterns. 2. Calculate real edge with mathematical clarity. 3. Align your identity with your trading nature. 4. Build edge through observation, testing, or modeling. 5. Master exits to multiply your edge. 6. Systematize execution to remove friction. 7. Manage psychology with data, not hope. Read the metagame to time your edge. 9. Embody your edge as a way of being. This isn't just information, it's transformation waiting to happen, but only if you act, only if you move from watching to doing, from learning to implementing, from hoping to building. So here's your first step. In the comments below, type one word, ready. Not great video or thanks, just ready. Because that single word is your commitment, your declaration, your first trade in a new game. Then choose one concept from this video, just one. Maybe it's calculating your edge, maybe it's testing exits, maybe it's building a trade database. Whatever hit you hardest, implement it this week, not someday, this week. Because edge isn't built in theory, it's built in practice. Share this with one trader who needs it, someone stuck in the fog, someone blaming themselves for system failures, someone ready for truth over comfort. Because the best traders aren't solo artists. They're part of communities that push each other toward mastery. If you're serious about going deeper, check the description. We're building something special, a place where edge gets developed, tested, and refined. No quick fixes, no false promises. Just frameworks for traders ready to do the work. But whether you join or not, remember this. You don't trade markets. You trade your preparation, your psychology, your systems. Build the trader who wins before the market opens. Because your edge isn't in the charts, it's in the mirror, it's in your process, it's in your commitment to mastery. The market opens tomorrow, same charts, same prices, same opportunities, but you're different now. You've seen behind the curtain. You understand the game. You know what builds edge and what destroys it. So, who will you be when that bell rings? The same trader hoping for different results, or the trader who finally builds what works? The choice was always yours, but now you have the map. Your edge is waiting, not in the next indicator, not in the next guru, but in your next action, in your next test, in your next level of commitment. Because masters weren't born, they were built. One trade, one test, one transformation at a time. The fog has lifted, the path is clear, your edge awaits. Now go build it.